The elements of insurance are as follows. The first is the existence of insurable interests. Second is the risk of loss. Third, the assumption of risk. Fourth, the scheme to distribute losses. And fifth is the payment of premium. In the existence of insurable interest, we have here portion in life or health or in property. Let's go first to life or health. Every person has an insurable interest in the life and death of whom? First, of himself, of his spouse, and of his children. Second, of any person on whom he depends wholly or in part for education or support, or in whom he has pecuniary interest. Third, of any person under a legal obligation to him for the payment of money or respecting property or services of which death or illness might delay or prevent the performance. And of any person upon whose life any estate or interest vested in him depends. So that pertains to the insurable interest in the life and health of a person. How about in property? The insurable interest in property is any interest therein or liability in respect thereof, and it may consist in the following. First, an existing interest. Second, an inchoate interest founded on an existing interest or any expectancy coupled with an existing interest. How about the other matters in consideration of insurable interest in property? So we have two. First is double insurance and overinsurance and multiple or several interests on same property. Let's start with double insurance. Double insurance exists where the same person is insured by several insurers separately in respect to the same subject and interest. Take note, it is not prohibited by law, but it may be prohibited by other insurance clause. So let's check what are the requisites of double insurance. The requisites of double insurance are as follows. The person insured is the same. There are two or more insurers insuring separately. The subject matter is the same. The interest insured is also the same. And the risk or peril insured against is likewise the same. So here are the requisites of double insurance. Now, let's go back. After discussing double insurance, we will have reinsurance, which is a contract through which the insurer procures a third person to insure him against loss or liability by reason of such insurance. In every reinsurance, the original contract of insurance and the contract, this is contract by the way, of reinsurance are separate and distinct from each other and covered by separate policies. How about the effects of double insurance and overinsurance? Let's take a look. We have here the effects. The insured, unless the policy otherwise provides, may claim payment from the insurers in such order as he may select up to the amount for which the insurers are severally liable under their respective contracts. Thank you very much, Chicken. Time check, it's now 10:51. Second is where the policy under which the insured claims is a valid policy. So, pag valid policy daw, any sum received by him under any other policy shall be deducted from the value of the policy without regard to the actual value of the subject matter insured. Now, where the policy under which the insured claims is unvalid policy, any sum received by him under any policy shall be deducted against the full insurable value for any sum received by him under any policy. Ang haba-haba, no? Letter D, where the insured receives any sum in excess in the valuation in the case of valid policies or of the insurable value in case of unvalid policies, take note, he must hold such sum in trust for the insurers according to the right of contribution among themselves. And finally, last effect, each insurer is bound, as between himself and the other insurers, to contribute ratably to the loss in proportion to the amount for which he is liable under his contract. So, those are the effects of double insurance and over-insurance. So, tago muna natin to. Tago muna natin yung isa. Let's proceed to multiple or several interests on same property. So, where there are multiple owners or mortgagor ata to, mortgagee, like tenant or lessor and lessee, each party may purchase insurance on the property to protect their interest in the event of a loss, but without a specific agreement regarding interest on a specific insurance policy. Each party can only recover under its own policy. So, may dalawa to dito. Okay, ito ay standard union or mortgage clause, tsaka yung open or loss payable mortgage clause. Isa-isahin naman natin yan. For standard union or mortgage clause, subsequent acts of a mortgagor cannot affect the rights of the mortgagee. Reason, as if the insurer made a new and an independent contract. On the other hand, pag sabihin naman natin, open or loss payable mortgage clause, subsequent acts of the mortgagor can affect the rights of the mortgagee because the mortgagor cannot, or the mortgagor does not cease to be a party to the contract. So this is our mind map for our insurable interest. For those of you who would want to get a copy of this one, please don't forget to subscribe and share to your classmates. For more review notes, we will discuss next, still in insurance, other elements. That would be all. Good night. Happy studying!